Most traders spend years searching for the perfect strategy. They hop from indicator to indicator, system to system, mentor to mentor, believing that profitability is hidden somewhere they have not yet looked. Deep down, many of them assume a painful truth without fully admitting it. They believe they are losing because what they are trading is not good enough. That belief feels logical, it feels safe, it feels comforting. Because if the problem is the strategy, then the solution is simple: find a better one. But this belief is the biggest lie trading sells. The uncomfortable reality is this: many traders are already trading strategies that could be profitable. Some are even trading objectively mediocre strategies. And yet, with discipline, those same strategies can outperform the undisciplined trader using something far more advanced. This is not motivational talk. This is structural truth. Discipline is not just about following rules. Discipline is the force that allows probability to exist long enough to work. Without it, even the best strategy collapses. With it, even flawed systems can survive, adapt, and produce results. To understand this, you must first understand what a strategy actually is. A strategy is not a guarantee. It is a statistical framework. It is a set of conditions that, over a large enough sample size, has a slight edge. That edge might be small, it might be imperfect, but it exists only in the long run. The market does not reward single decisions. It rewards consistency over time. And this is where most traders break. A bad strategy executed with discipline still allows the law of large numbers to function. A great strategy executed emotionally destroys its own edge before it has a chance to show itself. Discipline is the bridge between theory and results. Without discipline, the trader interferes with the natural distribution of wins and losses. They cut winners early, they let losers run, they skip valid trades, they add risk impulsively. They revenge trade, they hesitate, they overtrade, they panic. Each of these behaviors damages expectancy. Expectancy is the mathematical heart of profitability. It is not about how often you win. It is about how much you make when you win, how much you lose when you lose, and how consistently you allow those outcomes to occur. Discipline protects expectancy. Even a weak strategy can have positive expectancy if losses are controlled and winners are allowed to play out. Even a strong strategy can turn negative if losses are expanded and winners are sabotaged. This is why traders with bad strategies sometimes outperform traders with good ones. The disciplined trader respects risk before reward. They accept losses without emotional reaction. They execute every valid setup. They follow position sizing rules. They stop trading when conditions are not present. They are boring. And boredom is powerful. Most traders want excitement, they want action, they want to feel involved. Discipline removes that emotional stimulation. It turns trading into a repetitive process. This repetition is what creates consistency. Discipline also removes decision fatigue. When rules are followed automatically, the trader is not constantly debating. There is no internal argument, no second guessing, no emotional negotiation. The mind becomes quieter. When the mind is quiet, execution improves. This is another misunderstood aspect. Discipline is not willpower. It is structure. Willpower fails under stress. Structure survives it. A disciplined trader does not rely on motivation. They rely on predefined rules that remove choice in critical moments. This is why discipline can carry a bad strategy further than intelligence can carry a good one. Most traders think discipline means forcing yourself to behave. In reality, discipline means designing your environment so misbehavior is difficult. Clear rules, fixed risk, limited trades, defined sessions. These constraints protect the trader from themselves. A bad strategy without discipline is chaos. A bad strategy with discipline is controlled exposure to probability. Controlled exposure is the key phrase. Trading is not about being right. It is about controlling damage when wrong and extracting value when right. Discipline ensures that wrongness does not spiral. Without discipline, a single loss can turn into a cascade. A trader increases size to recover. They abandon their plan. They chase entries. One mistake compounds into many. With discipline, a loss ends cleanly. It is contained. It does not infect the next decision. This containment is what keeps traders alive long enough to improve. Most traders blow accounts not because their strategy is terrible, but because they could not survive drawdowns emotionally. Discipline is what keeps drawdowns shallow. A shallow drawdown is recoverable. A deep drawdown creates desperation. Desperation destroys logic. Before we dive deeper, let me ask you this. Are you struggling with fear, doubt, or overtrading? The truth is, most people don't fail because of bad strategies. They fail because of bad psychology. There is a moment every trader reaches where the illusion finally cracks. It usually comes after months or years of effort. You have studied charts. You understand setups. You know when a trade is valid and when it is not. On paper, everything makes sense. But your results still do not reflect what you know. This is where frustration turns into confusion. You start asking dangerous questions. Why am I still losing if I know what I am doing? Why does it feel like everyone else figures it out except me? Why does my strategy work perfectly in theory, but fall apart in real trading? At this stage, most traders double down on complexity. They assume the missing piece must be something technical. A refinement, a filter, a better indicator, a smarter entry. Very few consider the real issue. The real issue is that knowledge without discipline does not translate into performance. Knowing what to do and doing it under pressure are two completely different skills. This is where discipline reveals its true power. Discipline is not about understanding the rules. It is about obeying them when your emotions are screaming for relief. Relief from fear. Relief from boredom. Relief from frustration. Every undisciplined action in trading is an attempt to escape discomfort. Overtrading is an attempt to escape boredom. Closing winners early is an attempt to escape anxiety. Holding losers is an attempt to escape pain. Revenge trading is an attempt to escape shame. Discipline removes escape routes. It forces you to stay inside discomfort long enough for probability to work. Most traders never develop this tolerance. They react instead of endure. This is why discipline often looks like doing nothing. Not taking trades when conditions are unclear. Not increasing size after losses. Not chasing moves you missed. Not interfering with open positions. These moments of restraint are where discipline quietly creates profit. A bad strategy, when paired with discipline, still benefits from restraint. Losses stay small. Wins are not cut prematurely. Trades are taken only when rules align. Over time, the damage from flaws in the system is reduced. Without discipline, flaws are magnified. Think about this carefully. A mediocre strategy might have a slight edge, or even be close to break even. Discipline pushes it into profitability by preventing emotional leakage. Emotional leakage is the invisible tax traders pay. It comes from slippage caused by hesitation, oversized losses, impulsive entries, and premature exits. This leakage is often larger than the edge of most strategies. Remove the leakage, and suddenly the strategy works. This is why discipline feels like a cheat code once it is mastered. But discipline is not built by motivation. Motivation fades. Discipline is built by identity. The disciplined trader does not think in terms of outcomes. They think in terms of process. They judge themselves by execution quality, not by profit or loss. This shift is subtle but transformative. When profit becomes the goal, emotions dominate. When execution becomes the goal, emotions lose influence. A disciplined trader can lose money and still feel successful if they followed their plan perfectly. An undisciplined trader can make money and still reinforce bad habits. Over time, the disciplined trader grows stronger, even during drawdowns. The undisciplined trader grows weaker, even during winning streaks. This is how discipline compounds invisibly. Another reason discipline makes bad strategies profitable is because it allows accurate feedback. When you execute consistently, results reflect reality. You can see what is working and what is not. You can adjust intelligently. Without discipline, feedback is corrupted. You cannot tell if losses came from the strategy or from your behavior. Most traders never isolate this variable. They tweak systems endlessly without fixing execution. They blame entries when exits are emotional. They blame markets when position sizing is reckless. Discipline isolates performance. Once isolated, improvement becomes possible. This is why professional traders focus obsessively on risk. Risk is the only variable they fully control. A bad strategy with excellent risk management can survive. A good strategy with poor risk management eventually self-destructs. Risk management is discipline in numerical form. Fixed risk per trade, maximum daily loss, maximum weekly loss, predefined position sizing. These rules create boundaries. Boundaries create safety. Safety reduces emotional pressure. Reduced emotional pressure improves decision-making. Everything loops back to discipline. Another truth is that discipline slows you down. And slowing down is what most traders resist. They want progress fast. They want confirmation. They want proof they are not wasting time. Discipline offers delayed gratification. It asks you to trust a process without constant validation. This is psychologically difficult. But the market rewards patience more than brilliance. Most edges are small. They reveal themselves only over hundreds of trades. Discipline is what allows you to reach those numbers without self-sabotage. This is why traders who survive long enough often become profitable, even without dramatic changes. They simply stop hurting themselves. They stop breaking rules. They stop forcing trades. They stop reacting emotionally. Their strategy did not magically improve. Their behavior did. This behavioral improvement often feels anticlimactic. There is no sudden breakthrough moment, no explosion of profits, just steady improvement. Many traders miss this because it is not exciting. They expect success to feel dramatic. Instead, it feels calm. Calm is discipline manifesting. Another overlooked aspect is discipline during winning periods. Most traders associate discipline with losses, but discipline is equally important during success. Winning streaks create overconfidence. Overconfidence leads to increased risk. Increased risk leads to drawdowns. Discipline keeps risk constant regardless of recent outcomes. This protects capital and psychology. A bad strategy combined with disciplined risk during winning streaks can still generate growth. An undisciplined trader will often give back gains quickly. This cycle repeats endlessly for many traders. They build up, then collapse. Build up, then collapse. Discipline breaks this cycle. It flattens emotional extremes. No euphoria, no despair, just execution. This emotional flattening is what allows longevity. Longevity is underrated in trading. It is the ultimate advantage. Markets change. Conditions shift. Strategies lose edge. New edges emerge. Only traders who remain emotionally and financially intact can adapt. Discipline keeps you intact. This is why discipline is more valuable than strategy. Strategy answers the question of what to trade. Discipline answers the question of how you behave while trading. The second question matters more. A trader without discipline is a liability to themselves. A trader with discipline is resilient. Resilience is what carries traders through uncertainty. Most traders are not defeated by the market. They are defeated by themselves during uncertainty. Discipline creates emotional insulation. It does not remove fear or doubt. It prevents them from dictating actions. This distinction matters. A disciplined trader still feels emotions. They simply do not obey them. This obedience is what destroys strategies. Every time you override rules for emotional reasons, you weaken the system. Do it often enough, and no strategy can survive. Discipline keeps the system intact. And when the system stays intact, probability has room to breathe. This breathing room is where profitability lives. Even a bad strategy, given enough breathing room and controlled risk, can surprise you. But only discipline creates that space. Without it, the market feels chaotic and hostile. With it, the market becomes manageable. Not predictable, manageable. This is the mental shift that changes everything. You stop trying to win every trade. You start trying to execute every trade correctly. The results follow quietly. Discipline does not feel powerful in the moment. It feels restrictive, limiting, boring. But over time, it becomes freedom. Freedom from emotional swings. Freedom from impulsive decisions. Freedom from self-blame. This freedom is what allows traders to finally see clearly. And clarity is the soil where consistent profits grow. At some point, every trader who survives long enough arrives at an uncomfortable realization. The market was never the main enemy. The charts were never the real problem. Even the strategy was never as broken as it felt. The real battle was always internal, and discipline was always the missing weapon. This realization does not come with excitement. It comes quietly, often after exhaustion, after trying everything else, after running out of new indicators to test, after realizing that no new information is saving you from repeating the same mistakes. This is where discipline stops being an idea and becomes a necessity. By this stage, most traders have already seen proof that their strategy can work. Maybe not perfectly, maybe not consistently, but enough proof to know it is not completely useless. They have screenshots of winning trades, backtests that show promise, demo results that once looked impressive. Yet live trading keeps exposing the same cracks. Those cracks are not technical. They are behavioral. Discipline is what seals those cracks. When discipline becomes non-negotiable, something fundamental changes in how trading feels. The urge to interfere weakens. The need to be right fades. The obsession with outcomes loses its grip. Trading stops feeling like a test of intelligence and starts feeling like a test of character. This shift matters more than any strategy upgrade. A disciplined trader no longer needs to constantly change systems because they are no longer trying to escape discomfort. They accept that discomfort is part of the process. They expect it. They plan for it. Losses no longer trigger identity threats. Wins no longer inflate ego. This emotional neutrality is what allows bad strategies to function better than good strategies in the hands of emotional traders. Because discipline stabilizes behavior. Stability is rare in trading. Most traders operate in cycles of intensity and collapse. They trade aggressively, burn out, step away, then return with renewed motivation, only to repeat the pattern. Discipline removes cycles. It replaces them with routine. Routine is boring, and boring is profitable. When you trade the same way, every day, with the same rules, same risk, same process, results start to reflect reality instead of mood. Reality might not be glamorous, but it is honest. And honesty is the only foundation that can support growth. One of the most powerful outcomes of discipline is trust. Not trust in the market, trust in yourself. Most traders do not trust themselves. This is why they hesitate. This is why they second guess. This is why they interfere. Discipline rebuilds self-trust slowly. Every time you follow your rules, even when it hurts, you send a signal to your brain that you are reliable. Over time, that signal becomes belief. Belief reduces anxiety. Reduced anxiety improves execution. Execution improves results. This chain reaction is subtle but relentless. A trader with self-trust does not need perfect confirmation. They do not need certainty. They act decisively because they trust their process, not because they expect immediate success. This decisiveness alone can turn a mediocre strategy into a functional one. Many traders underestimate how damaging hesitation is. Late entries, missed exits, reduced position sizes, or last-second cancellations all distort strategy performance. Discipline eliminates hesitation. It replaces emotional decision-making with procedural action. You see your criteria, you execute, no debate. That clarity is rare. Another reason discipline elevates bad strategies is consistency of sample size. Most traders never give a strategy enough trades to reveal its true edge. They abandon it after a handful of losses, or they modify it mid-drawdown, or they apply it inconsistently. Discipline forces patience. It says you will take the next 100 trades exactly as planned. No adjustments, no improvisation. This patience allows statistical outcomes to emerge. Even a flawed system often performs better than expected when applied consistently. Inconsistency is what kills most edges. Discipline preserves them. It also preserves mental energy. Undisciplined trading is exhausting. Constant decision-making, constant emotional regulation, constant self-doubt. Disciplined trading reduces cognitive load. You are not deciding what to do. You already decided. You are simply executing. This frees mental space. With less mental noise, traders make fewer mistakes. Fewer mistakes equal better performance. Again, not because the strategy improved, but because the trader did. This improvement compounds. Another uncomfortable truth is that discipline exposes your true relationship with uncertainty. Many traders think they want consistency, but what they really want is certainty. The market never offers certainty. Discipline accepts uncertainty and operates anyway. A disciplined trader understands that a good decision can lead to a loss, and a bad decision can lead to a win. They do not confuse outcomes with quality. This understanding protects psychology. When psychology is protected, traders can continue executing through rough periods. This endurance is what separates those who eventually succeed from those who quit. Most traders quit not because they lack intelligence, but because they lack emotional stamina. Discipline builds stamina. It trains you to tolerate ambiguity, delayed gratification, and temporary failure. These traits are not taught by strategies. They are built through repetition of disciplined behavior. Over time, the market starts to feel less threatening. Not because it changed, but because you did. Your reactions soften, your impulses weaken, your focus sharpens. This is where trading starts to feel professional. Not exciting, not dramatic, professional. Professionalism is calm, measured, predictable. It does not chase. It does not panic. It does not celebrate prematurely. It executes. This execution is what allows even simple strategies to generate steady results. Simple does not mean easy. Simple means repeatable. Repeatability is the foundation of consistency. Consistency is the foundation of profitability. Discipline is what holds it all together. Without discipline, complexity becomes chaos. With discipline, simplicity becomes power. This is why many professional traders use surprisingly basic systems. They understand that their edge comes from execution quality, not cleverness. They know that the market does not reward intelligence, it rewards consistency. Discipline is consistency in action. When you finally embrace this, trading changes forever. You stop searching for the perfect setup. You stop blaming the market. You stop waiting for confidence to appear. You act correctly, even when confidence is absent. Confidence follows action, not the other way around. This is the final inversion most traders need to understand. Discipline comes first. Confidence comes later. Profits come last. Trying to reverse this order leads to endless frustration. When discipline becomes your anchor, strategy becomes secondary. You can refine it, improve it, adapt it, but you are no longer dependent on it for emotional stability. That independence is what makes you dangerous in the market. Not because you know something others do not, but because you can execute what you know when others cannot. This is why discipline makes bad strategies profitable. It removes self-sabotage. And once self-sabotage is gone, the market becomes less of a mystery and more of a mirror. A mirror that reflects not your intelligence, but your behavior. Change the behavior, and everything else follows.